Hello traders, my name is Gregor and welcome to a new video update in which we will take a look on the euro dollar and Aussie dollar. On the euro dollar weekly chart, as you know, we turned bearish here from potential top of a wave B triangle after a free wave bounce in wave E, which was a fifth leg of an ABC DE triangle. So this was a running triangle, possibly complete here, and as I said, because of this extension lower through this super line connected from 2012 lows. On the daily line chart, we can count 5 waves of decline here, which I believe it's a wave 1, blue wave 1, followed by a rally, which was expected because we know that after every 5 waves correction follows. So last week we also identified and called the bottom here of wave 1 after a very nice textbook ending diagonal pattern, which usually cause a very sharp reversal, and this is exactly what has happened. The euro dollar moved sharply higher for almost 400 pips. So I think this is still only first leg of a recovery in wave 2, because we know that wave 2 must be subdivided by minimum 3 legs, because this is the minimum structure of a corrective patterns, and wave 2 is a corrective pattern. Okay, so we expect more upside here. Also notice that this move is very sharp, so either it's a wave A of a free wave bounce, which means a zigzag in wave 2, or maybe even start of a larger new impulsive count, but that's not really important. We need to focus on one wave at a time, and this is a minimum 3 waves to the upside. So I think that we will see more euro dollar strength, but ideally we will see wave B pullback before we are going higher. Notice that wave A also now is trying to reverse lower from this gap zone back from mid-March, when the euro dollar gapped lower for almost 160 pips. So usually, as you know, these gaps, once they are filled, will tend to cause a reversal in the trend. Okay, so this has happened here. As you know, we were bearish on euro dollar at that time, and when the gap was filled, we warned you about a possible new acceleration to the downside, and you can see that market then formed this ending diagonal. So now we are again back in this zone, gap zone from March 15th, 18th. So if this gap zone again will hold as resistance, then of course we could see a pullback lower in wave B, which is actually expected from a technical point of view, especially if we also put MACD. Just a second, let me check the MACD here. On the MACD we can see lower reading on the histogram, while the prices were pushing higher here. So this is actually divergence, which tells me that bullish momentum and volume are decreasing here, which is typically the early signs for the end of a trend. Okay, so this is an early sign for a possible coming pullback in 3 waves, which will be in wave B. Now on Friday, when the non-farm payrolls report were released, the numbers, as you know, were not very good, and the euro dollar moved higher from here for around 200 pips, and I have seen several times before that after few days of trading, after the non-farm payrolls report, the market reversed back towards the point where the non-farm payrolls report was released, and this comes in around 12920. So I would really not be surprised to see a 3 wave retracement in wave B back towards this region. Okay, especially not because, as I said, because of this decreasing momentum, and because of this gap zone, and also because of the wave count. And also I'm tracking possible head and shoulders pattern here. This could be right shoulder, head, and now this may be neckline, and we will see the right shoulder here. Okay, so this is the wave count that I'm tracking very closely, and I think that there could be some nice long opportunity for wave C push higher if we get this free wave retracement back towards 129, 12940 region. Okay, that's for the euro dollar, and now let's take a look Aussie dollar. On the Aussie dollar weekly chart, we updated this chart on our site during the weekend. As you know, we were tracking this triangle and wave for some time now, and we mentioned this Sunday that wave 4 triangle is possibly complete here, because we have seen a free wave of retracement in wave E that we have been tracking for some time. So this wave E is actually final leg of an A, B, C, D, E triangle, and if that's the case, then we know that market should move impulsively higher. We can see that prices are already slightly breaking above this trend line, which is again early indication that this market is ready to move much higher. But this is the weekly chart. We of course want to see a weekly close above this trend line, and ideally above this wave D, which will put bulls in progress. But the reason why we called end of wave E in wave 4 triangle here was on a daily chart, where rally from the low can be counted impulsively. Okay, so as you know, we identified this 5-wave rally and also identified a 3-wave counter trend movement back into the territory of a previous wave 4, and prices once again reversed nicely higher from this region, and this move now appears to be very strong. Quite a typical start for a larger degree in wave 3, okay, because as you know, wave 3 is typically the strongest move, okay, the strongest wave compared to other waves 1 and wave 5, which are also motive waves. So this is looking very encouraging for bulls. So I think that if we are on the right track, then this level of course should not be breached, okay, because if any pullback will occur, let's say maybe wave 2, which will be sub-wave of a larger degree of wave 3, then this wave 2 must not retrace more than 100% of preceding wave 1. Okay, so we are bullish on Aussie dollar. The next thing that I will keep a very close eye on this pair here is of course on this base channel. Base channel is a channel where you connect start of wave 1 and low of wave 2, then you put a parallel line on the top of this wave 1, okay, and when you see prices breaking sharply above this upper trend line of this base channel, then this is usually a confirmation that volume and momentum are increasing, in which typically occurs in wave 3. Okay, so this is then an important evidence, important breakout for a wave 3 price action in the middle of a larger impulsive 5-wave advance. Okay, so ideally this market will extend higher through this falling trend line on the weekly chart and through this upper trend line of this base channel, which will then cause even more acceleration back towards previous swing highs. Okay, traders, that's it for today. Have a good day. Bye.